Greetings from CBRE Hotels Italian office in Milan. Hotel performance in Italy is improving in all key urban markets, art cities and gateway cities. Investment volumes in 2013 were in the region of 500 million euros, and current figures are in line with that result, and we expect further growth to come in 2015. Investors are sovereign Middle Eastern funds, family offices, Asian owner-operators, and US private equity targeting hotel-related debt. I wish you a great conference and a great afternoon. See you soon in Italy. Bye.
Hello from CBRE Hotels in Dublin. I'm here to tell you a little bit about our market, which is very, very strong at present. Trading has been improving since 2010. We've seen a steady increase in RevPAR from 2010 until now, with RevPAR increasing from about €50 up to €70. This has attracted some international investors into the country who see a lot of value here, as values have dropped significantly from the peak in 2006. We've also got a very high quality of hotel stock because a lot of the hotels were built in the last 10 years. The investors are coming from the US, continental Europe, the UK and also Asia. And there's also very good demand from domestic purchasers now as well, who are coming back into the market. The investment spend in Ireland in 2013 was about €160 million, and that was over 33 transactions. Already for the first half of 2014, we've had 27 hotel transactions with a spend of about €130 million. So we are expecting a very strong year for 2014, and with the pipeline of hotels that are coming to the market in Ireland, we're going to see a very strong 2015 as well.
Hello, greetings from Barcelona. I have been told to summarize the current status of the Spanish hotel market. Well, what I can say is that the sun in Spain is shining again. After 4 years of recession, the market is on speed for recovery. Our leisure markets are performing really well, especially those that have great exposure to international demand, such as the Balearic and Canary Islands, Costa del Sol and Catalonia. Our city markets are a bit behind, as they have a major dependence on domestic demand, which is still weak. However, there are a few exceptions, like Barcelona, which is trading really well since the downturn in 2009. As the Spanish economy is recovering, hotel investment is back again. Capital source is very diversified, and we have seen relevant transactions achieved by investors coming from the US, Middle East, Europe, China, Singapore or Latin America. The profile of these investors is also diverse, from institutional funds to private equity groups, high net worth individuals or sovereign funds. Currently, there is a high interest and activity on debt trades, but asset deals are also flowing into the market. In summary, Spain is again on the radar, and we hope to be there for long. Thank you and have a very nice afternoon. Bye-bye. Adios.
Greetings from the Munich office. The German hotel investment market is very bullish and is one of the top 3 hotel investment markets, together with the UK and France. We recorded a deal volume of 1.4 billion in 2012, which rose to 1.7 billion last year. In the first half of this year, we already recorded a volume of 1.5 billion, which was more than double compared to the same period last year. So who's driving this? Unfortunately, it's not the Germans. International investors are dominating our market, mainly private equity firms and operators from the US and France. The biggest transaction we saw was the sale of the Mallpark portfolio to Accor. This portfolio comprises 86 hotels in the Netherlands and Germany and is operated by Accor themselves. The biggest single asset transaction is the sale of the Hilton Frankfurt, also to an international investor, for well above 100 million euros. The trading performance in the key German cities is very good, and we expect the strong performance to continue into next year. I wish you all a very pleasant afternoon and hand back to Amsterdam.
Greetings from Paris office. Things are going rather well in France, both in terms of investment and trading performance. In spite of a challenging economic environment, the French hotel sector has shown steady growth of the investment volume, from 1.4 billion euros in 2011 to 2.4 billion euros in 2013. This strong appetite for prime hotel locations was evidenced by the very successful sale of the future Hilton Opera in Paris. Paris does remain, together with London, the most attractive gateway city for international investors, Middle East capital ranking first, ahead of North American and Asian investors. 2014 should be a good year, with still a huge unsatisfied demand for the right hotel assets in Paris. Back to you, Amsterdam.